Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on the show today. 291 stocks are reporting earnings. We're not going to get to all of them, but we'll get to as many of them as we can. We'll talk about maybe we're going to get a Fed decision today on the new Fed chair. We got jobs number tomorrow. But mostly earnings will be the story of the day. Joel, what's going on in the markets?
Nice range overnight. Pre-market high 74.50, couple points away from there. That's one tick off your close of 74.75. Big area there. On the downside, there was some false sirens in Tel Aviv last night. They hit the spoos on that. Spiders were closed, so they couldn't trade. They went down to 63.50, so we're $9 off that low. So that was that's going to be a target on the downside if we ever can get down $10 in a day. Crude is down a dime here at 54.20. Gold just can't clear 12.80. We did temporarily, but down 210 at 12.75.20. Silver above $17, but down 9 cents at 17.09. All right, Dennis, before we get to all the earnings reports, got to talk sports just for 1 second.
The sports still ruining my life, but congratulations to the Houston Astros.
And I went on the record as saying this is probably the happiest I've been since a non-Detroit, non-Michigan team have ever won a national championships or a professional sporting
Is
event.
it because the city of Houston deserves it after
exactly
the bad year?
They do. Yep. I agree with that.
Yep. And also, I don't say this very often, but I hate the LA Dodgers. I absolutely.
Why don't you like the LA Dodgers?
Well, just a little story with this one, okay? A short story, too. You know my best friend, Ira, right?
Yeah.
Okay. Well, his dad hates the Los Angeles Dodgers. And you know why? You know who he considers the 3 worst people ever in the world?
Who?
Hitler, Stalin, and Walter O'Malley. Do you know who Walter O'Malley is?
Yes, he's the one that destroyed he moved the Dodgers.
He moved the Dodgers from Brooklyn to LA, and I've hated him ever since. So that is my multiple reasons. I don't know if anybody in the chat knows that. Maybe Ace knows that. But, Walter O'Malley. Even though Branch Rickey, the general manager, went to Michigan, it was Walter O'Malley that moved him. But, man, oh, man, that is my reason why I am so happy the Houston Astros won. So let's get to the markets, Dennis. What report do you want to start out with first?
Oh, there's just so much we could talk about. But let's go to the big gun everyone's talking about this morning, and it is going to be actually Tesla. You might have thought I was going to say Facebook, but Facebook's only moving a couple bucks here right now. Let's talk Tesla. It's down 14 points here in the pre-market. It's been holding the 300 level, Joel. I'm going to say that's the level that it absolutely needs to hold. Spencer, give us the details on this TSLA report.
Yeah, Tesla came out. I'll give you the numbers, but we know the EPS and the sales don't really matter as much as the deliveries, but I'll read you that too. So Q3 sales for Tesla, $2.98 billion versus a $2.3 billion estimate. The EPS was a $3.70 loss to a $2.30 loss estimate. So they lost more than they were supposed to. Again, those don't really matter as much as the deliveries do. And here's what they delivered in the quarter. Almost just under 26,000 Model S's, Model S and X's, actually, 222 Model 3s. So the total deliveries for the quarter were just over 26,000 cars, which, again, and I feel like we say this every quarter, is less than they said they would deliver.
Usually they give them a pass anyways, though. So they're not giving them a pass, at least an early trade here. But I've learned the hard way here that when Tesla's down, you don't short it in the hole because a lot of times it does come back. I don't know. There's some major support down here. If I'm just looking and not even looking at the pre-market chart, I'm looking at the daily chart. 303 was the low we got back down to in July. And if you go out to the weeklies farther than that, you hit 300, 302. There's been some major report in the lower 300s, or major support in the lower 300s. Joel, what did they do in the pre-market here?
Actually, I want to add one thing. The last thing I will say is that when they updated their delivery guidance like 3 weeks ago, Elon Musk said that they expect to be able to deliver 5,000 vehicles a week by the end of the year. That is now by the end of Q1 18. So push it back a quarter. So again, just pushing it back, pushing it back. Joel.
All right, pre-market low 300.21. You are
That's right there.
$7. So I don't know if you're going to get another shot of it. We're going to be looking to see if that holds. Underneath, folks have to be aware that your May 5th low was 296.80. So underneath that, I think you get a little sell stops, a little whoosh down there, 96.80. And will it close above 300? Let's see what happens. I think psychological, a lot of people see it holding this morning. It did come down hard off to the report. So that'd be happening. But Dennis, I have a proposition for you here. And I want you to think about it. And I know and I don't want to do it right now because Tesla's down $20. But what if you think if you bought the same amount of Ford and GM, okay, and shorted Tesla? What do you think that would be do you think you'd be up or down money in 5 years?
I don't know. It's you know what? Logic says, and I've argued that for a long time. I don't think Tesla should be worth more than GM and Ford, but now they're saying Tesla's more than a car company. I've been wrong on that trade so much. Like I didn't think Tesla went, and this is one stock that we get some right on the show, we get some wrong on the show. But I've been bearish really since like $200. I haven't, shorted it, thank goodness. But it just keeps going up and up and up. And was it a bubble up to 380? I don't know. All I can say is the guy is very innovative, and you're buying kind of the Elon Musk brain. So I'm not coming in here and going to say anything about whether, I should be buying GM and Ford and selling short Tesla. I own Ford in my investment portfolio. You can kind of see still where my money is. I'm more of a value guy. Tesla is not my stock because it obviously doesn't make money. I usually only invest in companies that make money.
All right. I was following this thing a long time off the IPO, and I don't know if you remember this, Dennis, but it hit 40 like 9 times on dailies and also hit it on monthlies. I said, I'm buying through this thing when it goes through 40. And I waited for a pullback to 40, and my order is still out there. I put it in there GTC. So if it comes down to break out, where it broke out from at 40, I may take a look at it. But yeah, we'll see what happens. A lot of downside pressure, street leaning the right way into the report. Now we have a stock that had a good report, but a great report, but it's trading in the red. Let's talk about Facebook.
Yeah, Facebook numbers, Spencer.
Yep, Facebook Q3 EPS, and again, we know these numbers don't always matter as much as the monthly active and daily active users, but we'll give those two. Q3 EPS of $1.59 versus $1.28. Sales of $10.328 billion versus a $9.84 billion estimate. So they beat nicely on the EPS and the sales for the quarter. And then where were my MAU numbers that I had to do last time? Let me track those down for a minute, but they were good. Oh, here we go. Daily active users for the quarter up 16% year over year to 1.37 billion users. Monthly active users now 2.07 billion users for the quarter.
Incredible.
Mobile ad revenue made up 88% of total ad revenue. So mobile is really, they're continuing down that path. It's crushing it for them. And their employee headcount is up 47% year over year.
2 billion users.
Yeah.
That is just unbelievable when you think about it. What is the population of the world? 7?
I'm not sure, honestly.
And you got all the people in North Korea that aren't allowed internet, so you got to knock them off. There's other, remote places that probably don't have good internet either. So of all like the internet,
7.6
public. Yeah, and then you have people like my dad, or the older people who aren't going to get on Facebook. Some of them are, but some of them definitely aren't. I mean, it's absolutely incredible to think they've built this in what have we been 7-8 years to 2 billion users.
Well, it's been like 13 years.
Did Barron's ever have this wrong when they thought this was a $15 stock?
Actually, I'm not even positive how they define. I'm going to look this up. How they define what an active user is, because I'm sure they have more than 2 billion users, but that's just what they define as a monthly active user. So you're active, I guess, within, I guess once a month. I'm not sure, but I know people that are
still
on Facebook.
2 billion users when you think, maybe, of, probably 6 billion people who've got, good connections wherever they are. I mean, you're talking like 33% of the world is on Facebook. And a lot of older people in retirement homes, that obviously aren't going to be on Facebook. There's a lot of babies in the world that maybe aren't on Facebook. So people who can actually, work to have an internet connection and know how to use it, they probably got like half the people on Facebook. It's incredible.
And you know what? It looks like it's a good setup for trading too in Facebook today. I'm going to give you one number on the upside, 182.66. That's just off the high. That was the old time closing high. So see if people want to get out at the mark. We're $2 away from there. And on the downside, got a great number for you too as well. And that will be the key to downside in Facebook. And that's going to go, I'm going to go with your pre-market low. Your pre-market low in Facebook is just under your 2-day low. Your 2-day low was 178.94. Your pre-market low is 78.60. So let's just call it 179. 179 is your major support. Old heck's going to break loose if it takes that out. And I think you see sellers at that all-time closing price of 182.66.
All that being said, Facebook had run significantly up into the report. And we've been talking about that. And if you're wondering why it's down here today on pretty good numbers, I believe that is the reason. They will come up, the media will come up with a fundamental reason behind it. They always do. Truth of the matter is, we know, because we've been listening to this show, that everything that's been running up into the reports, that doesn't absolutely blow it away. Bob, it blows it away, obviously, which we'll talk about in just a second. Sneak preview there to the next stock. But, Facebook is, down 2 points here because they ran up so much into the report. That's the reason that's down. And media doesn't want to publish a reason like that. They want to say, it's this piece of the report that's causing it to go down, or this was said on the conference call. And it's just, sometimes there's a fundamental reason. A lot of times there isn't. The media will always find a fundamental reason. I will tell you at least half the time their fundamental reason is not that reason.
The pre-market high when Dennis got real excited on his algorithm, 188 was your pre-market.
Wow. 180. You know what I wanted to short it to? I wanted to short up, and
you were at 190.
I'm always at those whole numbers, Joel. You know me. And you were at 189.99, weren't you? Right in front of me.
189.99. Because I know I could take you out. I know I could take you out. But anyways, Baba blows it away. This one
Baba always blows it away. And we were joking on the pre-market show. I mean, Chinese company, are they ever going to miss? They can cook the books over there.
I didn't say that, Spencer. He said it.
That's a joke, but it's kind of, a little half joke.
Okay, moving on. Alibaba.
Moving on. Nothing to see here. Moving on.
Alibaba reported an EPS of $1.29 versus $1.03. So a nice 26-cent beat there on the EPS. Sales of $8.28 versus $7.85 billion. So nice beats for sales and EPS for the quarter. They're also increasing their fiscal year 18 revenue guidance up about 4% on both ends of the range.
Young Spencer had this one right. He initiated it with a strong buy rating yesterday, even before the report. And Spencer, what was your other reason?
Singles Day is coming up in like a week.
Singles Day.
Right? And last year they did.
I'm not single though.
How much? What was it they did in sales last year? 20 billion in sales in one day, and or 17 billion in sales in one day. So this year it'll probably be over 20. And the stock tends to run up ahead of Singles Day. So I was looking at that.
Stock just tends to run up.
It just tends to run up in general. Yes, it tends to just
ahead
run.
Of any day, ahead of a Monday, ahead of a Tuesday, ahead of a Wednesday, ahead of a Thursday, ahead of a Friday. It just tends to run up. We know that buy and balance, it's been there forever. Probably going to be there again today. I mean, it's up on 2.7 million shares, so it might be a little bigger than normal, but this stock has just been a monster. It's been, and one stock, we haven't got Tesla right. Maybe, or I didn't get Tesla right. I know Jason Raznick did, so props to him on this one. So not all of Benzinga. Some people were actually long Tesla here all the way through this. But Alibaba, this is one that we've got right on this show. Me and Joel have been bullish the stock ever since it blew that quarter out back.
No, it's when they came out. They came out and said, "Oh, we're just going to double revenues next year." Just
that's it.
That's it. I mean, okay.
Every pullback on Alibaba's been a buy since. Neither of us own it, but we've been bullish all the way up.
I'm going to fill this gap. I've been wanting to fill this gap here under 130.
Down at 130.
Yeah. Congratulations on Kenny Glick, who's been wildly bullish this stock too. Dennis is willing to sell the float at 200 if it gets there today, right?
Probably.
It won't get there.
Where did it get? How high?
195.
Even those whole numbers, folks, those things work.
Just 92, 93, 94, 95. Finally, one worked. And I also want to.
95 is a better one, though. The round numbers,
because it's half between
200.
Yeah. And I just want to tell you, a seller's been lurking there since 7 this morning. And not only have we hit 95 as a pre-market high, in 2 other brackets, you had a 94.91 high and a 94.77 high. Then the guy turned around and decided to sell it on weakness. It's leaking here. I'd be a little bit hesitant. If it doesn't hold 191, that's my swing number today. We're below it. I'm bearish. I expect to give some back. What do you got to do to get to yesterday's range? Got to get all the way down to 188.88. So there are the levels: 195, 191, and then 188.88 fills the gap. I think it's going to fill the gap today, Dennis. It's only $2 away.
I don't know. I'm torn on this one because they did really blow it away. And, we've outlined the scenario when stocks are running up into the report. If they just slightly beat, the stock goes down. If they miss, the stock absolutely goes down. If they come in line, it goes down. If they blow it away, it goes higher or can still go higher. And that's what they've done. But it is significantly off the highs. And this is the market that likes to sell stocks that have been running up into the report. So it has that working against it. We just watched MasterCard, not that Bob has anything to do with MasterCard, but we do have precedents here where stocks have been actually, some of them blowing it away and still ending up, when the stock opens at 930, sellers seem to emerge. So that's my one concern about chasing Bob up here, is that it's ran up so much in the report. But there is underneath demand like crazy in this company as they continue to blow it away. Institutional money managers want this. Everybody seems to want a piece of Alibaba. We know from the imbalance that we see every single morning that some institution that's been wanting a piece for a long, long time. And I think on any significant pullback, there's a lot of buyers lurking below.
Okay. All right. I think you fill the gap on this one. But anyways.
If you don't like to stomach the big moves in Alibaba, you can always trade Alt-Baba, or as they call it, Altaba, but I like to call it Alt-Baba. AABA trades almost percentage for percentage with BABA. You can look 2.57% AABA trading up this morning, 2.42%. It's right there. $72 stock. So those two I trade together. I actually took the pair through earnings report together, comfortable with that. AABA versus BABA. I got out of it already, but I like trading those two when the report's a little volatile, because sometimes you can get out at a pretty good price just with the volatility. But that's just arbitrage. AABA versus BABA.
All right. Do you want to continue with earnings, or?
Let's go to Spinner. Let's move away from earnings just for a second. 291 stocks report. We'll take a little breather. We'll come back to those earnings reports. And if there's anyone you want to talk about in the chat, or tweet at me, Triple D Trader, we can talk about those earnings reports. But wow. LB is the stock that I want to talk about. Spinner is bringing it up. And the stock actually came out with guidance last night, and it was solid.
It was good. Elbrain's saying their October 2017 sales up 5%, sales of $794 million versus $756 million in the same month last year. So a 5% year-over-year increase. Their total Q3 EPS, what they projected will be, is 25 to 30 cents, which is in line with the estimate. And their fiscal year EPS is in line as well. But that 5% year-over-year October sales increase is what is the catalyst today.
Kicking myself on this one. Scalper blood got me.
Oh, really?
Remember I bought it on that pullback, and I bought right near the low. They see the little pullback in September. I put this actually, and I should have put it in my investing portfolio, but I stuck it in my swing trading portfolio, and that was my demise. If I would have stuck it in my investing portfolio, I probably would still have it. But I liked it on the pullback. You had a positive Goldman note that came out. That was back on the 21st. And then, that note came out, and then the 22nd it popped. after the Goldman note, obviously, and got up to over $40. I got a quick $1.50 out of it, I think. It was like literally a trade that I had overnight, and I held it for like 20 minutes, popped $1.50. I was like, that's a pretty good move, and I banked it. And now I look at it at $46. I bought this at 37, sold it like 38 and change, and I could be up at 46 or $47 here this morning. I liked it from a fundamental basis. I liked the dividend. I thought it was safe. I didn't think lingerie was going away, and I wish I would have stuck this one. I should have stuck in both. Should have stuck some in the swing trading portfolio and should have stuck some in the investing portfolio. I did not stick in the investing portfolio, and that is why the scalper blood got me once again.
All right, couple numbers to look at. 48.50. Whoo, that was your after hours high, and maybe we'll get back up there again. I don't know. What I'd be looking ahead of that July 7th low, 47.32. So that'd be a target. I mean, if I took this thing in and they came out with this report, and I could get out at 47.32. I try and take some off there, scale up to the pre-market high. Now, if you want to talk longer term here, and if this is, just, I'm not shorting this. I mean, Skechers, I mean, you saw what that did when that was actual earnings report. This is guidance, but you got a gap fill in here, and it's a big gap to fill from July. That must have been an earnings report. So if things get really rocking and rolling, 49.94. That was the high probably after their Q2 report. On that day, the stock went from 54.11 to 46.49, and you got a gap between 49.94 and 53.59. So a couple areas here. I think it's a little too much, too fast today. So keeping an eye at first level.
Maybe, but it's just been the market.
Who knows?
This has been that momentum market that just continues to rock and roll. When a stock starts going up and starts going, they go. I mean, look at the General Mills. Stock absolutely, not General Mills, sorry, Kellogg's. Stock absolutely hated going to the report, kind of blows it away, and boom, it goes 62. We're like, well, it feels a little bit overdone. 63, 64. I mean, it's a silly market. So could this get silly as well? I think it could. And I think I'm more of a buyer on pullbacks here because he got a major breakout here over $45. And if you do indeed open over that 45.57 high that we had on October 23rd, I feel like you're in breakout mode here. I think this stock could find more buyers even than it has in the after hours session here when the real liquidity comes in at 9:30. And I think on a pullback here, get in the mid 45s, 46s. I like it. I still like it. I think it could see 50 here. Now, maybe not today,
correct,
but I think it could see 50 in the next, week or two. And maybe today. It's crazy enough to do stuff like that, but I don't think today.
Just you're measuring Kellogg, the Battle Creek, Michigan company. Look at this setup, Dennis. 63.72, your high from yesterday. 2-day high, the high of the earnings report, 63.93. So you got a big seller lurking in 64, right? On the downside.
Look at the book. Sometimes we can just actually confirm these sellers. I'm going to the book on Kellogg right now. Is he lurking or showing his hand? Oh, only 3,300 shares there. So he's not showing too much stock. But he could be a little bit bigger than that.
Yeah.
They don't have to show all their hand.
All right. But keep an eye on the matching lows, 61.77, 61.81. So there's your key. Let it trade in between there, get a breakout above 64 or a breakdown below 61.77.
Let's jump back over to our earnings parade here. And where do you want to go? I mean, we could go like the GoPro and Fitbit. We could go like Qualcomm. We could go the Disaster FireEye. We could go the Shake Shack Baby. Where do you want to go?
I kind of want to go. You kind of pulled off something that I'd never been able to do in the markets in Square. And so can we just
go? Square. Well, that's off the earnings. That's a downgrade here.
I know, but you're being nimble like I taught you many years ago. I'm very proud of you on this one because I think that's the hardest thing to do in trading is what you did.
I have been long Square pretty much every single day coming into because of the imbalance, and I've been buying at the close, selling at the open, or buying it after hours, selling at the pre-market, every single day almost. And this has been going on for a couple of weeks because we know that big buy imbalance has been there, so it's been a good play for me. So I had it long last night, and I started trading down. I was like, something's up here. I'm like, I was just seeing trade down a little bit, just like volume. Something's up. And I'm like, I don't know. So I'm still long at that point in time. And then, I see it, and it's downgraded. And it got downgraded by Stifel. So I turned around and got out of my long, and I also actually got short the stock. So believe it or not, I've been long pretty much every day. I'm actually short Square. I got short up and the 36 handle. And I've covered already. It actually washed out this morning. I don't know what they were doing, but this thing traded out. I covered 35.55 and 35.35 and went all the way down to 35.15. So I'm out of square now, no position, but it's been my stock, man. I'm just in the zone in square. I think it's been probably in the last 2 months, it's got to be my best day trading stock by far. So it seems like every day it's one of my big winners. And so here I am, I've been long, and I'm actually making money on the short side today. So I love this stock.
All right. We got a key
DC
set.
said they shorted it last night too.
Who did?
Way to go, DC.
DC, really? Way to go, DC.
Nice, DC. Good job.
Glad you guys are fighting to hit those bids. Nice setup here, too, for traders. The last two lows, 582 and 587. We're right there right now, so you're not actually don't have a gap fill. But let's just call it 36 the number of the day. It gets above 36. It could run up to the close. I would love to see it at the close at 36.47. You won't, but underneath that pre-market low, look out, folks. 34.66. You could just see the daily lows on this one. Quite a bit in between, but 36. That's just above those matching lows from the last two sessions.
All right. Earnings. The chat's throwing tickers left, right, and center at us there. David B wants to talk Teva. Holy cow.
Oh.
Can Teva? It is just down like every single day. And now at last night, I think Allergan said they're dumping their shares of Teva. Everybody's dumping poor Teva. I mean, this is Valiant Part 2, VRX Part 2. I mean, this looks to me like it's, with all that debt, this could be potentially a zero. And I'm not saying it is. I'm saying there's that potential is out there. It's got a 9% dividend. Did they cut the dividend? I think
they eliminated the dividend.
Yeah. So anyway, it would have a 9% dividend at this time. I got to adjust my spreadsheet, obviously, but stock's now $12, getting killed here again. What did they say last night or this morning here, Spencer? Because this is another epic disaster for Teva.
The Q3 EPS was $1 versus $1.04, and sales of $5.6 billion versus 5.
Man, they made money, eh? They made a buck.
Yeah, and sales are $5.6 billion versus 5.62. So in a vacuum, the Q3 was not great, but not terrible.
In a vacuum,
not terrible. They did lower their fiscal year guidance, though.
What did they say?
That's hurting. So fiscal year 17 sales, 22.8 to 23.2 billion. That was the original estimate. Now it's 22.2 to 22.3. So they lowered it by about $1 billion. Their adjusted EPS they lowered as well.
What do they want for the?
It was $4.30 to $4.50. That's what it was. Now it's $3.77 to $3.87.
They make $4 a share and it's trading at 12.
Well, they're not going to. They're saying they're not going to make that anymore. They're going to make $3.
Oh, $3.50. I mean, wow. This is the ultimate value trap right here. I can't believe I'm not getting killed in this.
Dennis,
I own all these value stocks. It's a debt. I looked at the balance sheet on this. I looked at investing in this thing back when it got hit originally from 30 down to like $22 or $25. And I was like, is it getting cheap enough? And I looked at the balance sheet with all that debt and all I could think was VRX. And I was like, no, I can't do it. And I'm so glad, that I actually took the time to look at the balance sheet and didn't, just jump in and say, okay, yeah, this just makes a lot of money and it's dirt cheap here now. So I'm not in Teva. I'm still scared of all the debt there. Unbelievable that they can make that kind of money still here. But obviously, I don't know if that's going to continue forever because they got a hell of a lot of debt there.
What did you say?
They got issues there.
Did you say something? You have to adjust your spreadsheet. Did you say that?
Yeah.
So you got a spreadsheet with all the stocks and all the dividends?
I have all kinds of toys over here. But the eliminated ones throw me for a loop. Anyways, no, it actually extracts that data from somewhere else. It's obviously not extracting the correct data because they didn't, whoever the data provider is on that, is still showing me a 9% yield. Short the data provider because it's still saying 9%. I remember that from my head. There's no dividend, but it's showing me 9% dividend.
12.
Yeah. I do a lot of Excel. I do a lot of Excel stuff where you extract the data down to Excel, and then you can manipulate. And that's how I used to do my algorithmic trading as well. A lot of it was through Excel. Some of it I had coders through C#, but I mean, a lot of it, is just basic Excel spreadsheets.
All right. They didn't have Excel when I was in college. 1225. They didn't have computers, Dennis.
They didn't have computers. There was no computers.
All right.
He was on typewriters.
If you've been waiting to cover your short, you used to stick the thing, the cartridge in the side, to type. Yeah, that's what we used to use. 12 and a quarter. was your
Don't age.
March of 2001 low. So, oh my, I like $12. I know it's trading here right now. It looks like it's crashing through, but 12 and
You
a
think
quarter.
it'll bounce?
Eventually, it just might bounce from $11.
Bounce at zero.
12 was my long-term number. 12.13 was your January of 2001 low. And then in March, you were at 12 and a quarter. So if you've been waiting 16 years to cover the short, here's your chance.
You're going to pay a lot of fees in those 16
It'd
years.
be
Like,
worth
can you
it,
imagine
though.
holding something short for 16 years? I wonder if there's anybody that has done that. Like just hold short for like years and years. Maybe Ackman or somebody.
Well, he's not
Because the fees,
he's not short Herbalife anymore.
Involved in shorting, the fees weren't. You know what though? 10 years ago we didn't have the fees we do for shorting stocks either. So the fees were never bad 10 years ago. We're under 12 now too, Joel. By the way.
Okay, I still like 12. I think it closes above 12.
I'm not trying to pick a bottom in Teva because there has not been a bottom pretty much ever. I mean, we had the little lift there, went from 16 to 20, and everybody's like, Teva's back. And then a month later it wasn't. And what about the Valiant too? Everybody, you know what? I'm going to give the chat some heat on this one. There's some people in the chat when this thing was up at 18. They're like, why don't you like it at 18? And I was like, well, I still don't love the balance sheet. And it's still, when the stock will run from 14, 18, I don't like chasing stocks. It's back down here at 11 bucks. So I called that one right too, not buying VRX when I was 18. Give myself some props on that
one. Guys, I have to admit that you guys did upset Dennis on that one.
They were
on the Valiant, and I'm not going to call anybody out.
There was 2 or 3 of them there,
yeah.
And they were all picking on me because they were all bullish VRX, and they're like, "Why don't you like VRX here at 18? This looks great." Well, It's 11.93. That was right like in the end of July when it was looking like it was going to break out, but the breakout was a fake out, and it's back down here. Their chat's usually pretty good though.
Come on, chat. The chat. You know who you are.
But we give ourselves some heat sometimes. I'm giving whoever was on that day, and I don't remember who it was, some heat for this one.
All right, $12. Valiant. I will just look at that. They're hitting it Valiant off this too, right? And what did I tell you about people not needing drugs anymore because of artificial intelligence and artificial reality? Right again. You see that?
No drugs in the future. We don't need drugs anymore.
All right, 1176.
I think the drugs are going to get better in the future, so I'm still banking on drug companies, just not Teva.
Artificial reality.
Did you look at Alibaba?
No. Was it red now?
It's trying. It's down under 190 now. It's still leaking. Yeah. It was up $6 when we talked about it. Now it's up 3. Still leaking. It still fits that bill of a stock that was running up into the report, and I'm concerned this goes red here. Alibaba. I know it's down 3. I know it had an awesome report, and you know what'll happen? If it does go red, somebody will find some fundamental reason. Oh, they said this, or oh, look at this. So dig through and they'll find some reason to justify the price. When the bottom line was, we were telling you on pre-market prep at 195 and 193 and 191 that this stock had run up a lot in the report and dangerous to chase these stocks because they've been selling these off on good reports.
And if 11 doesn't hold in Teva, May of 2000, you had a 994 low. So I think just like single or the teens and GE, $10. I don't think you're going to see it. Dennis, you want to? We got about a minute here to bring Peter on. You want to talk how you almost made the journal in GE yesterday, or did we already talk about?
I can talk my GE trade. So I trade GE all the time. We know it's one of the day trading stocks I do a lot, and I had this in my head. I had it coming in that they are going to take this through 20. And then they're going to shove it up I shouldn't say
we know.
But you know what I mean. They're going to punish the shorts for it. Anybody who's shorting it through 20, because a lot of times it'll have a rip your face off rally after going through a significant level. So look at the date and bring up the intraday chart. And it goes through 20, goes down 1996, and then comes back up over 20. I think I buy it at 2001. And I'm like, here it is. It's coming. This rip your face off rally I think is going to come right now for a day trade. So I bought it 2001. And it comes back down through it, and it meanders there for about 2 or 3 minutes. I was like, oh, it's not doing what I wanted to do. I wanted to rip the face off right away. I turned around and sold it at 1997. So I lost 4 cents on my day trade, and then I watched it in the next 20 minutes rally 50 cents. And I was like, I had it right, and I got shaken out for 4 cents. How do you get taken out for 4 cents? You
didn't make the journal though, because
didn't make the journal. Didn't sell the absolute low. I usually do. Like I did in what was the stock I made the journal on?
Snap.
I sold it. I'm still there. 11.28. That was my sale, guys. I'll admit it. But GE, no, I did not sell 1996. I sold 1997 yesterday.
You know what? How Nick
I still long in the invest portfolio.
Nick can write on his charts. I would write Dennis sold here. You know, when you can write on the chart. Okay.
Just start doing that. You can have a whole article on that.
All right. What do we got coming up here? 8:35.
We got Peter Tchir coming on in just a second when I go grab him. Peter, formerly of Green Capital, now he's the head of macro strategy at Academy Securities. So we'll be right back with Peter Tchir.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick and Spencer Israel, and we are joined on the line by Peter Tchir. He is head of macro strategy at Academy Securities. Peter, how you doing today?
Very good. Yourself?
We're doing okay here on kind of a dark, rainy day here in the Motor City, but I want to talk to you about Academy Securities. You just took over there, head of macro strategy, and I kind of like the purpose here. Why don't you inform our audience here about Academy Securities and what they do?
Yeah, it's a categorized as a disabled veterans firm, so it's a diversity and minority firm in terms of a bunch of regulations. What that means in practical terms is really exciting for me. It is a very veterans-focused firm. The entire management team is veterans. Phil McConkey is the president. He's pretty well known, former Giant, but also was the Naval Academy. And below that, we've got about 45% of the employees are veterans, and we're going to try and keep that close to 50%. I'm not a veteran, but one of my roles and mandates is to hire veterans and mentor them. So I think it's a pretty exciting way to do this business. You know, we're adding something back. We're training veterans. We also have a team of 14 retired generals and admirals who serve as an advisory board for the geopolitical side, which again, as a macro strategist, is really attractive because I'm able to plug into people who have served in Korea, who may know H.R. McMaster and others, and really get much better information about the geopolitical consequences. And then my role is to interpret that for markets.
Yeah, and then also concentrating on corporate issues and then supported diversity element as you mentioned. So let's move over here to the markets. And the Fed didn't pull any punches yesterday, and the rate hike. I think I'm reading 65% chance of the rate hike in December. Let's just talk about the markets ahead of that. Man, a lot of the high flyers were really rallying the last couple of days, kind of risk on, and now things are changing a little bit. Or do you think they're changing, Peter?
I do. I think we're going to go into a small period of risk off. I think last Thursday was, a phenomenal day, right? We came out, all these great earnings from the tech companies. Friday, we did extremely well. But Monday, we failed to kind of follow through. Even yesterday, we rallied again and failed to follow through. Right now, we're sitting here waiting today for the new Fed chair announcement, which I don't think is going to have a long-term market impact. I think it will probably be Powell. I think that's largely priced in. And then we get really to the nitty-gritty, which is what's going to happen with the taxes. And I think we're due for some disappointment in terms of tax reform and what it's going to be able to do.
And you kind of got a whiff of that. I think was it earlier in the week on Monday? I can't remember. We had a dip in the market. They were talking about with the corporate tax. And boy, I'll tell you, the market did not take that very well. Now, of course, the buy the dippers came in. So, I mean, what if, I'm just throwing a what if they don't get anything done by the end of the year and it's pushed to 2018? What kind of effect do you think that will have on the market?
I think it will cause a pullback, and especially what I'm hearing now, and it started a little bit on Monday, and I've been talking to people in D.C., there's now a lot of conversation about phasing in these deductions. So we won't get to 20% for corporates for a number of years. So I think that will spook the market, because whether we get it this year or next year, all of a sudden it's not going to be as dramatic as we hoped. And, we know how Washington works, right? If it's not done right away, there's always a chance it gets repealed or pulled back. So I think the market will be fairly disappointed, and that will impact stocks.
All right. So we have geopolitical concerns. We also have, other things in the administration that are being questioned, the election and whatnot. I mean, you actually had an arrest of Paul Manafort here. And is the Trump and the administration, are they just going to be able to pick up that rug and just sweep everything under and just keep moving on?
I think the market kind of took relief from the fact that what Manafort was really charged with had little to do, if anything, to do with the elections. So I know the market has been focused and the media has been focused on the investigation of the elections. What actually scares me is he went back and was charging for money laundering going back as far as 2006. So I think it's actually concerning that the mandate seems much broader than we realized. And I think we should not breathe a sigh of relief that it had nothing to do with Russian collusion. I think we should be a little bit more concerned of what he's probing into and what problems that could cause, in DC as a whole, when we really need them, especially with tax reform, such an important driver to market pricing.
All right. So the veterans, you're taking in their money, and I know what you're doing with it, Peter. You are taking all their money and you're buying Bitcoin.
That is something I do not currently own. I wound up missing this last rally. It's been interesting. I would say in virtually every meeting that I'm involved with at this stage, it's Bitcoin comes up, and it doesn't matter whether it's with treasurers at large corporations, whether it's hedge fund managers, whether it's traditional institutional investors. There are people who love it, people who hate it, people who are confused by it. So I think it's become such an important part of the market or the conversation. It's really interesting to see how it develops. And one key for me has been, I think we just saw CME plans to launch futures. That should allow ETFs. So I think that will allow more people to, for lack of a better word, dabble in Bitcoin.
And boy, I tell you who must be really disappointed. I think Winklevoss, are those the ones that originally started Facebook? They, a couple months ago, tried to get started an ETF and based on Bitcoin, and they were turned down. I'm not sure what the exact reasons were. But there is GBTC out there. All right. So let's move. Let's say let's say things don't go as well in Washington and you get a decline, or for this market, a decline would be just not going up every day, just hold it steady.
That does have that feeling.
Yeah. Are there any sectors? Biotech has got really hit lately. Some healthcare stocks have been taking a hit lately. Is there any place to hide if the market does start to stall?
I still actually like the energy sector. I think the energy I'm starting to, again, really like MLPs when it looks like maybe the AMLP ETF bottomed out last week, partly because certainly if we get any geopolitical event, I think that will benefit the energy companies. And ultimately, there's a lot of support within DC for really going self-sufficient in terms of energy production and energy distribution. So that's one area I kind of like as a defensive play, because certainly if anything occurs in the Middle East or Korea, oil prices should go up. So that's been one area I've liked. That's getting down to one of the fewer areas I like right now. Again, I'm not looking for some dramatic pullback, but I think, we want to be a little bit cautious. And then, that'll give us a chance to reinvest.
What's the yield on that? Do you know?
Let me pull that up just as we're speaking. It's been pretty decent.
Yeah, it has had a nice.
It's up over 8% right now.
Hey, that can't get that in the bank. All right. What would you like? Let's say we are going into a correction here. What would you avoid? What would you absolutely like if a veteran came in and they said, I want to put this stock in my portfolio? What would you say? Oh boy, I don't want to do that.
Sorry, just to clarify one thing. So although we have veterans working with us, we're currently only dealing with institutional customers. So we don't deal with individuals.
Okay.
Just to make that clear.
Sure.
But what would I like or avoid?
Avoid. Absolutely avoid.
I would be avoiding all these low volatility and minimum volatility ETFs right now. I think we are at a stage where people plow money into that, and they've had decent inflows because they're a little bit nervous about being in the market, and they somehow believe that we potentially get the best of, so that you get the best of, equity upside without the downside. I think just like we saw in September 2016, those can actually lead to the downside because I think they're held by fairly weak hands. They are held by investors who are not really committed to the market. So I think in any sort of turnaround, it's maybe counterintuitive. I think those low vol and min vol type funds will actually underperform because they're held by very weak hands who are not committed to staying in the market.
We're on the line with Peter Tchir, head of macro strategy at Academy Securities. Peter, your expertise is not only in the credit markets and the U.S. markets, you also cover Europe. And let's just talk. How's the Brexit going? What's Draghi up to? What's going to happen overseas that can have an impact on the U.S. markets?
I think Draghi continues to perform very well. I think he, certainly by the standards of, he's able to continue to prop up the markets. Brexit's an ongoing concern, but it seems to be digestible for the markets. You've got Spain having its issues, but again, I think that's digestible for the markets. So I actually see continued growth out of Europe. I think that's going to do well. I think one thing that will help U.S. markets out of that is I think you will see the euro start to rebound once again. And if the euro's rebounding, that keeps the dollar obviously weaker, which I think helps our markets. So I think we're going to piggyback. When I look at banking, for example, I'd probably rather invest in European banks than U.S. banks right now, because I think they're where we were maybe in 2011, 2012 in terms of that potential for really vigorous growth. So I like Europe a little bit better in that respect. I'm also seeing a few little warning signs here domestically where the leverage loan market, which is the senior security equivalent of the high yield bond market, is starting to show a little bit of weakness, not much. You're seeing some deals that have been done recently, some big corporate deals like Tesla. The bonds are struggling. Staples, the bonds are struggling. These were deals that were done in August where the bonds are trading below 95 cents on the dollar in terms of Tesla and below 90 in terms of Staples. And so when you watch the high yield market struggle a little bit, that becomes an early warning sign. It's not a screaming red flag or anything, but it's certainly showing a little caution right here.
All right, Deutsche Bank, horrible relative performance here since the financial crisis, but we'll talk about that with you next time. Real quickly, precious metals, gold and silver have been taking a hit. Does that have any place in any of your portfolios?
I'm not a huge fan of gold ever. I can see that why you might have some of it. I think people have been replacing that a little bit with Bitcoin, and that's clearly been a debate that comes up a lot recently is Bitcoin a replacement for gold or not? There's gold bugs who would adamantly argue that it's not. At the other end, to the extent that you're holding gold as something to, help you through a crisis, Bitcoin is clearly more portable to the extent it works. So I don't mind gold here. I think it's going to continue to, struggle to do really well until Bitcoin is either affirmed as something that's really good or becomes, the fraud many people talk about in craters. So I think gold's going to languish because Bitcoin has been behaving as a much better hedge recently.
Peter Tchir, head of macro strategy at Academy Securities, joining us here on Benzinga's Pre-Market Prep. Great information, Peter. Hope to have you back on again soon.
Thanks a lot for having me.
All right. Our pre-market traders stepped up at $12 in Teva, and they got it off that low here, currently trading at $12.32.
Good call, Joel, on 12 bounds. Conference calls going on. There's multiple things being said here right now. I'm just kind of following along. So the Teva CFO says they will only pay down $3.5 to $4 billion debt in 2017, not the $5 billion that they had planned. Also, the one executive says, and they're joking about this on Twitter, actually, they said it's premature to talk 2018.
Yeah, it's only
are we out 2 months away only? If somebody asked about 2018, it's premature to talk about 2018. Okay,
and we stand corrected.
Yeah, the Teva dividend does still exist. It just got cut before. So it's still, so that 8 point, so don't fire my data provider. The 8.91% that it currently says it's yielding here because it's bouncing around so much is in fact true, according to Benzinga sources.
They cut it by 75% is what they did on August 8th. So
Is that what it was?
yeah, 75%.
So it's a big cut. Anyways, obviously there's still issues here, but it's too premature to talk 2018, they said.
All right, so let's move on here. We still got some earnings stocks. We did one
Still
rating.
GoPro and Fitbit. I like to do those two together always. So you got GoPro and Fitbit both trading down. Spencer, details on our camera on a stick company.
GoPro made some money and then they lowered their guidance. So the Q3 adjusted EPS 15 cents. Hey, that's great. The estimate was only 2 cents. Great, 13-cent beat. And then they went and said their Q4 EPS will be 37 to 47 cents versus a 56-cent estimate. So no.
Still making money.
They're making money, but
that's good news.
When you lower your Q4 guidance, that's not gonna.
You know what? You just don't hear about it. Like it used to be, like everybody, oh, these GoPro cameras. My neighbor had 2 GoPros, and then my other friend, was talking about these GoPro cameras. You don't hear that buzz anymore. I mean, they need something else. Maybe it's going to be drones, maybe it's going to be something else, but they need to figure out, some other products. And Fitbit's the exact same thing. Everybody else has, other products, or they got apps for it now. And they don't need a Fitbit. And that's why FIT, give us the numbers for FIT. We're going to do these two together.
All right, Fitbit there yesterday as well. Q3 adjusted EPS of a penny loss versus a 4-penny loss estimate, so they beat by 3 cents. Sales of 392 million versus 391 million, so a slight beat for Q3. Q4 EPS coming in, I guess, pretty much in line. They see a 3-cent loss to a penny gain, and a 3-cent loss was the estimate. So I guess they slightly beat that. And sales of $570 to $600 million, which is also in line with the estimate. So they lost a penny for the quarter. They came out just ahead on the sales and just ahead on the Q4 guidance.
One-hit wonders here, both of these, Fitbit and GoPro, and obviously that's why the stocks are languishing as they are here now. When that hit is over, there you are.
All right, GoPro really got overdone, it looks like here, when it got to 905. That is your pre-market low. Go to the dailies. You see a lot of lows there at $9 too. So you got a nice bounce off it. I just don't know if, with that kind of bounce, if you're going to get back to $9. Of course, if you get anywhere in the 10 handle, I think you'll see some sellers in order to fill the gap from yesterday in GoPro. And you need to get to 1029 to fill the gap. Currently trading at 976, so not too far away from the gap fill. Also, Dennis, do you remember? I don't know if Dennis will remember this or Ace. Remember when this thing was up here in the 90s? This was back in late 2000. Oh, yeah. And the owner of the company somehow got JP Morgan to waive a covenant so he could sell stock. I swear to God it happened. I think I even did an article on it. And the guy got
Why not the lockup expired?
It was something.
They really tanked after the lockup.
No, but this guy got out in the 90s.
That's pretty crazy if that was the case.
Help me out, Ace. This is, I know you followed the stock back then, but let's just look at Fitbit here.
All I remember is when it was like $70, $80, $90 and we called it the camera on a stick. We took heat for that too.
All right, Fitbit. Let's see what Fitbit is doing here in the pre-market trading. Lisa really likes her Fitbit. She uses it.
I had mine for a month, and I got all the information I needed about myself, and then I gave it to a friend.
I bought one last Black Friday, and I used it. It was great. And then about 2 months ago, the wristband part broke, and I haven't gotten around to fixing it yet. So. And
the heart rate monitor never worked. That was always my complaint about it. I was like, my Fitbit heart rate, I got the Fitbit heart rate, and it never worked right. And then I read some article that it was like 20% out. Somebody did a study, and most of these Fitbit heart rates were like, monitors were 20% out. I don't know. They probably fixed that issue since then, but I was disappointed with the product, to be honest with you.
Okay, pre-market low in Fitbit, 5.85. That's a good level for you, folks. Your October 25th low was 588. So coinciding lows there. We'll see what happens. Trading at 605 right now.
Let's go Shake Shack. Is that store still busy, the one in Detroit just up the block from you?
Yeah, but it's definitely not like it was. There was consistently
not an hour to get a burger.
There was consistently a line out the door for the first like 2 months. But when was that? Like 6 months ago. So it's not out the door anymore. But there's always people. Whenever I walk by it, there's always people in there. Anyway,
have not had a Shake Shack burger. I want to have a Shake Shack burger.
When you coming home, we'll go over there.
Yeah, that'll be one of the lunches Joel owes you. Q3,
I don't owe him any lunches.
Oh, okay, fine.
We're
Q3.
flat on
like
lunches.
5.
No,
All right.
2 steak dinners. I do admit to the steak dinners.
The Shake Shack number was 17 cents versus a 15-cent estimate, and sales of 94.6 versus 94.7 million. So a slight miss on the sales and a slight beat on the EPS. So they're also raising their guidance for the fiscal year, and they're opening more stores. So
what's the market cap on Shake Shack?
Good question.
Pro has this information. I threw him under the bus. He's got to go click a couple clicks, but he'll get it.
Pro has this information.
Ooh,
what is the market cap on Shake Shack?
I'm just curious.
30. Where are we? 1.2 billion.
You know what the concern here is, and here, and Shake Shack obviously, has a long ways, and it could grow a lot, but and it's small still company at $1.2 billion. But I was looking like Buffalo Wild Wings, and you don't see those Buffalo Wild Wings everywhere. And I'm interested in Buffalo Wild Wings down the low 100s. Obviously, I was ticked off that it popped on the report because I hadn't bought it. I was thinking about buying it ahead of the report, and then I didn't pull the trigger. BWLD's market cap is
I just looked
1.77.
1.7. So it's
they have a lot of stores. Those Buffalo Wild Wings are everywhere. And you got a Shake Shack at 1.2 billion. I mean, can the growth potential for a Shake Shack be more than a Buffalo Wild Wings? Maybe. But I don't know. I just, and it's kind of, sit down restaurant versus a hamburger, chain. So maybe they can't compare it. Maybe it's apples and oranges a bit there, but that market cap's still a little bit lofty, isn't it? Shack.
Yeah, boy, oh boy, you got traded 40.82 pre-market high. So someone got real excited about that Shake Shack report. But 2 monthly highs, 38.26 and 38.27. Currently trading above that. Oh man, I think I'd kind of like to see it a gap fill. Maybe pick it up between 38 and 38.26 and hope it holds 38. But just look at this let's change time frame here. You can see those 2 highs on the daily. Look at that. Ping, you were there back in June, had trouble getting through. And then look on the monthly here. Man, at 38, just look at that area. 38, well, some other highs closer to 40. But long basing pattern here. I don't know if you're going to get a chance to pull buy it on a pullback. But Shake Shack looks like it's breaking out here above 38.
They're talking about Yelp in the chat, and this is pretty incredible there. If you look at the after hours chart, this thing got murdered last night, and it has come all the way back by the dippers, emerging in Yelp. Spencer, give us the details, and it's come all the way back.
29 cents for the quarter versus a 2-cent loss estimate. Sales of 222 versus $220 million. So a slight beat there. I don't know if the EPS compares. 29 cents versus a 2-cent loss is pretty different. So that may not compare. Q4 sales coming in lower than the estimate.
This is guidance.
Q4 sales are lower. Fiscal year sales are lower as well.
All right, said a lot of not so great stuff, and they hit this thing. So the algorithm hits when they see that bad, obviously guidance there coming out of the company. Where'd this get down to?
38.12.
It's got down to $38 last night, and then buyers started emerging. And you know what? RBC upgraded this morning, and you got to give them some props because this thing was a lot lower when they just upgraded it. And they made a call here. Usually, analysts chase price, but RBC went the other way, and they actually were upgrading the stock here and saying basically to buy the weakness. Well, holy cow! If you're listening to that RBC report from 2 hours ago, you're making money because this thing has come all the way back up. Is now up. So it went down to $38, losing basically 15% last night, getting it all back, and is now trading up 1.5% from the close. That's an incredible move.
And taking a look here, look at the 38.12. What reason it turned there is because people were waiting for this gap fill here, Dennis. Look at that low right at 38.12. Huge gap. So people thought, it's going to fall into the gap. I can buy it in the lower 30s. But then it turned around on a dime. I would just give you 2 numbers. The high of the move is 48.17 and the high close of the move is 47.15. We're currently trading above it. Only relevant levels. This thing just keeps going north and we'll have to do it without me.
All right, we're out of time. Tonight, we're going to get Starbucks. We're going to get Apple. We're going to get Pandora. We're going to get Plethora of other companies out there, CBS, Activision, Fossil, pick your poison. There's all kinds of companies, 291 stocks in total reporting today. Obviously, a lot of those were this morning, but a lot of them are tonight as well. And quick ratings, because we didn't get to those either. Bluebird Bio and Juno both getting upgraded here this morning by different firms. Bluebird Bio getting upgraded at BTIG. Juno is getting upgraded at SunTrust. So that's two stocks there to follow. US Steel X getting upgraded at Cowen, and we already talked about Square getting down at Stifel, getting downgraded at Stifel.
Yep, and those are all the ones I want to hit as well. Dennis, could we get any imbalances from you?
Baba, 278,000 to buy. Not surprising. Look at GE. It's got a buy imbalance, folks. It had a sell imbalance earlier, but Zinc buyers have just emerged to offset it there. 8,500 shares to buy, so it's small. But the G's trying to hold the 20. 1996 is a level that it has to hold, obviously. You know what? It was a nice pop bounce off it yesterday. Maybe there's still a tradable bottom here. 1996 you're out. So it's trading below 1990. I don't want any part of it as a trade. Merck, 85,000 to buy. Not sure why that's got such a big buy and balance, but that is significant for that stock at this time. Bank of America, 111,000 to sell. Square is a sell and balance. Only 3,700 shares, was trading out $1.14 now on that downgrade there. Got back down here to 35.33. I'd imagine there's probably a guy is still lurking in there with a buy and balance. And all the people who obviously are selling for the downgrade are putting sell orders in there and probably offsetting it. So I would not be surprised if our Square goes back to a buy and balance tomorrow.
All right. On tomorrow's show, we're going to be joined by Michael Olson. He's a senior research analyst at Piper Jaffray, and we're having Michael on specifically because he covers Apple at Piper, and Apple again reports today after the bell. So Michael will be on tomorrow to digest that report for us. If you wanted to tune in on PreMarket Prep tomorrow on premarketprep.benzinga.com, or on YouTube /Benzinga TV, or you can catch our podcast on iTunes, SoundCloud, and Stitcher to rewatch any old shows, including today's shows. But that's it for us for this Thursday show. Hope everyone has had a good morning so far, and hope you all have a good rest of your day. We will be back with you on Friday. Get ready to talk some Apple.